Thank you for joining California Capital Financial Development Corporation. We are a community development financial institution offering assistance to small businesses through our Women's Business Center, Procurement Technical Assistance Center, and other lending technical and assistance programs. We provide one-on-one business counseling, business training and workshops, technical assistance, financial education with access to loans and loan guarantees. Today, we will review the profit and loss statement. My name is Sunita Maharaj, and I'm a senior loan officer with California Capital. I have been in the lending industry for over 20 years, and I am proud to be able to assist small businesses. Again, thank you for watching this video. Today, we will cover basics of your loan request, lender's needs list, and profit and loss statement. The reason why we are going over the basics of your loan request and lender needs list is to help you understand why a profit and loss statement is needed during the loan process. The basics of your loan request is to find out how much money you will need. How will you use the money for your small business? We want you to be specific on how you will spend these funds. Will the business be buying something such as equipment? Will you use it for paying towards working capital, which will assist to pay for daily expenses such as rent, utilities, employee salaries, and inventory? A lender's needs list can also be called a conditions list. A lender will need business financials, and here is our list. 1 to 3 years current complete business tax returns, year-to-date profit and loss statement, year-to-date balance sheet, and business debt schedule. What is a profit and loss statement? The statement is a financial statement that summarizes the revenue, income, sales, costs, and expense incurred during a specific time, usually a fiscal quarter or year. These records provide information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. Some refer to the statement as a P&L statement, statement of profit and loss, income statement, statement of operations, statement of financial results or income, earnings statement, or expense statement. On a profit and loss statement or P&L, there is revenue, income, sales, cost of goods, gross profit, operating expenses, net operating profit. Let's break down the categories on this statement. We have revenue, which can consist of gross receipts earned by the company selling its goods or services. Costs of goods, which reflects all costs directly tied to any product made or sold. Please take note, you may or may not have cost of goods. Here is an example of cost of goods. For a restaurant, it could be food, napkins, and to-go boxes. For a clothing manufacturing company, it could be material and thread. If you provide a service such as web design or financial management, you most likely will not have a cost of goods. Here is how you would calculate your gross profit. It equals revenue minus cost of goods. Now let's go to operating expenses. Operating expenses can consist of rent, salaries, advertising, office supplies, internet, phone, and depreciation of furniture and equipment, and more. Now, how do you calculate your net operating profit? It is equal to revenue minus cost of goods minus operating expenses. That's your net operating profit. Here's a very simple profit and loss statement that you can complete yourself. I will jump into the document itself and demonstrate how easy it is to fill out. You must have your month reconciled to be able to put the correct information on this document. If you would like a copy of this document, please reach out to us. I will provide our contact information at the end of the presentation. Here's the profit and loss statement. You can input your company name, company address, type of business, borrower name, And then dates reported on this form. Please provide year-to-date information starting from the month you opened the business or from January of this calendar year. Here's your gross income, gross sales, other income, and cost of goods sold. Total gross income. This company has $55,000 in total gross income. This company also has expenses, accounting and legal fees, advertising, business rent, business telephone, business travel. There is no depreciation. They do have an insurance expense. They don't have a maintenance expense, and they have meals and entertainment expense. They don't have any postage expense. They do have a salary wage expense for an officer of $21,000. They do have employees that they pay for as well. They had some supplies that they paid for. They had some taxes as well. Here's other expenses down here at the bottom. Internet expenses and utility expenses. You can add other expenses here. Total expenses, this totaled it for you. This document will total everything here for you. So the total expenses that you have are $37,657. Your total net income, which is gross income minus expenses, is $17,343 for this business. Now that you know how to complete a profit and loss statement, let's go into more examples. Here's another example of a profit and loss statement. It has revenue, cost of goods, gross profit, operating expenses, and net profit. Not all businesses have the same operating expenses, so your business may have more or less than this company. Here are additional examples. As you can see with Paul's Plumbing, they didn't have much income for the last 9 months. So it appears this might be a side business for them. And if not, then they should explain the lack of income for the business. But what Paul's Plumbing does have is income, cost of goods, gross profit, expenses, and net income. These two statements have different subcategories under expenses, but that's okay. As I previously stated, not all businesses will have the same expenses. Now, this business has taken all of their expenses and only used a few categories. General and administration could include rent, utilities, payroll, and so on. This would be a great statement for you, the business owner, but should be more detailed for the lender, as we have shown in the previous examples. What is the difference between a profit and loss statement and a balance sheet? Whereas the profit and loss statement shows the income, expenditures, and profitability of a company over a period of time, the balance sheet provides a snapshot of the company's assets and liabilities as of a certain date. Here is a visual of the connection between the profit and loss statement and balance sheet. Let's go over a few sections. Sales revenue, making sales and incurring expenses for making sales, requiring businesses to maintain a working cash balance. Making sales on credit generates accounts receivable. Cost of goods sold. Selling products requires the business to carry an inventory or stock of products. Acquiring products includes purchases on credit that generate accounts payable. Now let's jump to operating expenses. Operating expenses is a broad category of costs encompassing selling, administrative, and general expenses. Interest expense, borrowing money on notes payable causes interest expense. Income tax expense, a portion, usually relatively small, of income tax expense for the year is unpaid at the end, which is recorded in the accrued expenses payable liability. Earning net income increases retained earnings. This is the end of our presentation. If you would like more information, please go to our website at capital.org. You can also find more videos on the website. I hope this information has helped you. Thank you for watching today.